Hey, most business owners right now are looking at numbers and thinking things are finally calming down. Turnover's down, quit rates are sitting in near historic lows around 2% in the US. And yeah, that should feel like a win, but hang on. What if I told you low turnover in 2025 and 2026 might actually be hurting your business more than helping? Because people aren't leaving, they're just quietly checking out. Look, I dig into retention through an economic lens, not just the usual HR stuff. And the data right now, it's telling a pretty worrying story. Analysts are calling this the great stay. Quit rates are super low, but global employee engagement, it's about 20%. And that means roughly about 4 out of 5 people are just going through the motions. I have a quick question for you. Does your team feel rock solid, stable, but maybe a bit slower? Today, I would like to walk you through 3 big realities we're seeing. Why super low turnover actually hide massive disengagement. Why intent to leave is quietly climbing even if nobody's walking out the door yet. Why small businesses like yours are feeling this the hardest, and what it all means for your bottom line heading into 2026. So, the great stay isn't the great thrive, unfortunately. And here's the thing most people miss right now: a lot of employees, their stress isn't about today, it's about tomorrow. It's about career growth. It's about staying relevant. AI coming at us fast, economic uncertainty. The question they're really asking themselves isn't, do I like this job? It's, is this job going to move my life forward? Quit rates may be low, that's for sure, but over half of the US employees, around 51%, say they're open to leaving if the right thing comes along. They're just waiting because timing doesn't feel right yet. That's not loyalty, that's hesitation. Retail burnouts, they're hitting 80% plus. Global engagements stuck at 20%. But in the top performing companies, they're hitting 70% engagement. That's a 3x difference. And that gap, it comes down to one thing: people believing this place gives them a real future. If your company feels more like a holding pattern than a launch pad, engagement tanks, even if desks stay filled. Here's the money question: if your people are showing up, but their heads are somewhere else, how much is that quietly costing you in productivity, ideas, and extra effort? This is the hidden retention crisis of right now. Intent to leave is the real warning sign. Here's a trap a lot of owners fall into. Only about 28% of people think now's a great time to jump jobs, but more than half are still open to it. If economic confidence bounces back in 2026, projections say turnover could spike towards 35 to 38%. So ask yourself, are your people staying because they're all in or because markets feel too risky to move? Your retention game is getting tested right now in slow motion. When confidence returns, will they stay because they feel invested or bolt because they were already mentally packing? So why do small businesses get hit the hardest? Big corporations they can weather some churn. They've got buffers. Small businesses, not so much. Recent surveys show that 63% of small business firms say keeping people is tougher than hiring them. Benefits costs keep climbing. 60% of owners say managing health benefits is way harder than expected. And 36% are dealing with ongoing retention headaches. Here's the brutal part: you don't have massive automation, offshore teams, or big HR departments to cushion it. When one person in a 12-person shop mentally checks out, you feel it fast. Let me hit you with this directly. If one of your key people went quiet tomorrow, less hustle, fewer ideas, how long before you see slips in performance? Before a client notices? Yeah, not long. What employees really value now, people are looking through a future lens these days. They're asking, will I actually grow here? Will my skills stay sharp in this place? Is the company investing in me? Will staying boost my earning power long term? Retention in 2026 isn't about making things comfy, it's about trajectory. 83% say flexibility matters a ton. Companies with real remote options see way better retention, up to 76% better in some studies. 92% of young workers want purpose, and almost half rank career growth right up there with pay and benefits. Learning focused cultures, they double retention because learning says we're betting on your future, and that builds commitment today. So, is your setup still built for 2015 or is it ready for 2026? Deal with employees has changed. If you don't update your side of it, low turnover on paper won't mean high performance in reality. If any of this is ringing any bells and you want a quick retention risk check for your business, I've got a diagnostic link below. Run it now before the market flips. Trends creep until they sprint. The big strategic warning. Here's what most owners are sleeping on. Low turnover today doesn't mean strong retention. It might just mean frozen mobility. And frozen teams don't innovate, they plateau. Plateaued teams slowly squeeze profits. Retention next year won't be about stopping exits, it will be about answering the one question every employee is asking: does staying here make my future better? If you can't show a clear yes, disengagement starts feeling like the smart move. And engagement, that's your real financial lever. So in conclusion, don't get fooled by the surface numbers, please. Stability doesn't always equal strength. Ask the tough one. Are my people staying because they're excited to be here or just cautious about leaving? When the market heats up again, and it will, only the businesses that have intentionally built real commitment will stay protected. Grab the diagnostic below. Audit where you stand, because what looks calm today could get expensive fast tomorrow. Let me know what you think. Drop a comment or grab the assessment, and talk to you soon. Thank you.